if you're brave enough to put it in something like Revolut or Monzo or one of these other challenger banks, then why not go and do it in X Money, especially when they're giving you such good interest rates.
Hello and welcome back to the Payment Expert Podcast, your source for the latest news, insights and analysis on the payments industry. I'm Thompsett, news editor at Payment Expert, and back with me today, I'm delighted to have Callum Williams and Kieran O'Connor, our senior journalists here at Payment Expert, here today to talk about all things X Money. Callum, Kieran, good to have you both back on. It's been a bit of a while, hasn't it?
Yeah, it's been a while. We've had quite a lot of guests in between, haven't we? So no, it's good. It's good to be back on.
Many guests, and I know you've both covered this, I suppose, launch last week. X launching X Money nationwide over in the US for its US Premium and Premium Plus subscribers. Kind of, I suppose, if you're following Musk, when he promised, that he would have an everything app back when he bought what was then Twitter in 2022. 4 years on, now he's got his first banking product. I suppose the main argument around the launch of X Money is, is it the start of a US super app, or is it too good to be true? Is it doomed to fail? Callum, is it real, or is it a gimmick?
Well, it's definitely real. It launched last week.
Is it going to last?
Yeah, I think obviously time will tell. It's obviously quite a short. We've got quite short use cases at the moment. What we're working with, obviously, it's only available to US X Premium and Premium Plus account holders, and it's obviously offering quite a lot of incentives such as 6% APY. Interest, instant transfer, account to account transfer, should we say, in terms of payments, and then there's obviously quite a lot of limits and holdings and what you can hold within the actual, I would say, digital wallet within the app. So it's obviously it's very early days. I think this has obviously been a part of Musk's plan since he bought Twitter. I still call it Twitter back in October 2022, and even since then he's been talking about getting payments onto the social media platform. And I think it's took a while. It took almost 4 years, but I think he's definitely going to commit to it. Obviously he co-founded PayPal back in the late 90s, so payments has always followed Musk wherever he's been in his business life. So I can see him committing to this.
Yeah, I mean, obviously we're from different parts of the UK, as our listeners can probably tell. So it's not available over here. But is it? I mean, like looking at it as it's launched, would you trust it? Like, would you actually put your own salary in
it? No, pretty much no. There's been quite a few X account hacks happening recently in terms of like high profile hacks of accounts, like the Robinhood CEO Vlad Tenev. His account was hacked recently, and that was used by hackers to promote a fraudulent meme coin that kind of ran up to about $1.3 million of stolen funds. So hacks are still happening every day almost when it pertains to the security of X. And I mean, just imagine if you're trying to put your life savings and trying to get some of that 6% interest. I don't think it will end well. And yeah.
Yeah. Well, also, will it last? Well, Kieran, you spoke quite glowingly in certain terms about the launch of X Money. I guess I'll put the same question to you. Would you put your money in it? I'm guessing yes.
I've had a really hard think about this, and I actually at first was like, why not? 6% APY, like that's way better than what I'm getting at the minute without name dropping any banks.
It's more than the national average in America too, which I think the FDIC's got it at around 0.38 at the minute. So whether that lasts, but who knows? But yeah, so you initially were going to, well, if you could have, you would have put your money into it.
If I could have, I would have. I mean, I don't know, where my head is at the minute is, what's the big difference between sort of, I know, and feel free to come back at me with this, but what's the big difference between X Money and what they're trying to do now as to when people started putting their salaries into Monzo when they first sort of launched with deposits. Because I understand, because X Money is also backed by a bank. Is it Cross River Bank, I believe?
Cross River Bank.
So
yeah,
it's not
that's right.
actually X that are keeping your money. It's not Elon Musk in that sense. So if you're brave enough to put it in something like Revolut or Monzo or one of these other challenger banks, then why not go and do it in X Money? Especially when they're giving you such good interest rates.
Yeah, I mean, it's the same. It is the same principle as like a lot of different fintechs, where they're kind of backed by banking providers to sort of run the banking services, and with a load of bank partners for insurance as well, for example. I suppose the thing, I mean, as it comes to X Money, the point is that a lot of people in the US have a bank, or they use maybe a Zelle or a Venmo. They have different financial products already entrenched. And if he's coming out and basically saying, I want to create an everything app, maybe a bit like what we have in Asia with the likes of WeChat, in China, which is very popular, which everyone pretty much uses everything for, to speak quite generically on the topic. But within the US, you've got different products already entrenched. So, I mean, I'm guessing he's got, you mentioned the 6% APY. I think they've got new kind of Visa debit cards personalized, and you can get your X handle kind of embossed very nicely on it. 3% cashback, no foreign exchange, all these kind of marketing. You could almost argue it's part of a marketing spend, right? Because a lot of it is, particularly the 6% APY, maybe won't last. So in that sense, maybe it's a customer acquisition drive. And if that's the case, do you think it will work? Do you think many people are going to go for it? Obviously, it's kind of limited at the minute with the users that can use it with Premium Plus and US Premium. Do you think he's kind of testing the waters, as it were?
Yeah, I mean, in that case as well, I think I'd to go back to your previous question. I think I'd use it and put my wage in it for the first few months until he dropped the interest, and then I'd take it out. But no,
it's expensive to keep changing back and forth though, as well, isn't it? It's quite time consuming.
I guess
the amount of products that come out.
Yeah, I guess when it's trying to compete with the likes of Venmo, I don't really see them two competing. I think they both serve completely different purposes, although there are some obvious similarities. Venmo at the minute in the US is used to sort of split bills and send money to your friends and family, and it doesn't come with that subscription that X Money does, so it's pretty much free to use. Where X Money at the minute obviously costs things like, is it around $8 I think a month that you have to pay to sort of be able to use it?
They keep promoting it like relentlessly.
Yeah.
No one, I don't think anyone's buying it at the minute.
And then I think also X Money, although he's obviously trying to attract people to deposit funds into the account, I think at the minute it's more geared towards the people like the creators and the people who are posting on X and making money through their posts on X as a way to sort of pay them easily, or easier than what they're doing already.
Yeah, I think that's also what Cross River Bank are also on board to do as well, is to kind of streamline that engagement, monetization stream that many of the mini X users gain from. I think they've kind of almost streamlining that payroll process. But it's funny you mentioned, Lewis, that maybe it's a marketing spin, because I think when Musk first had the plans to introduce X Money, much of the company's revenue was coming from ads and advertising revenue. About 70 to 75% of 2023 total revenue was made up of ad revenue, and I think obviously it also lends itself for X to become a super app, because the more different type of facets you have, whether that's posts, messaging, videos, ad revenue, then also transaction revenue as well, it's just a different diversification of your revenue streams, right? So I think that's also what he's trying to do, but we'll have to wait and see. I think the first use case will be the US, and then grow from there, I guess.
Yeah, I guess there's the other angle of some maybe regulatory concerns around it. I know Senator Warren, she's been quite vocal on a lot of things, including the Clarity Act, but she, I believe, sent a letter back in April, a formal letter to Musk, sort of raising those consumer data and oversight concerns around it too. And you sort of having, I guess, a platform which has user data, but for a different thing that's not as hasn't been sort of historically as regulated as financial services, and then now bolting on financial services to that as well. So there's that kind of issue there. Do you think there's obviously the chance that could the regulatory oversight could sort of come back to bite Musk? I know he was sort of as part of Doge, he kind of helped kind of minimize the kind of regulations around things that now it looks like X money may have previously sort of fallen under. So maybe you could argue he's kind of influenced things on the political level there too. Do you think that could eventually sort of come back round as politics changes in the US?
It does. I mean, it harkens back a little bit to when Facebook, or Meta, as it's now known, they tried to launch their stablecoin Libra. That caused a whole hoorah around sovereignty and currency, and had everyone panicking. But that was also to do with consumer payment data as well, right? In terms of how we allowing these big tech companies to now also get data from payments and transactions. So Musk's never been shy of battling, whether it be regulators or just his opponents in general, to be honest. So that fight in itself, he'll be up for it. But I think in terms of the security, like I mentioned before, in terms of like the hacks and just general safety over your account, obviously it will be linked to your X Money account as well. I think that's more prevalent when it pertains to just consumer safety, as opposed to some of the existing cybersecurity laws that might exist within the US at the moment. I think they would maybe need to have a look at that and think, well, how can we just beefing up these cybersecurity rules so hacks don't happen and money's not lost?
Yeah, on that, is that not a benefit of X Money as well? I know like the payment companies in the UK and the US are all talking about how most of fraud starts on social media. Having sort of a social media app now in the payments world, will X not be more, I don't know, encouraged to try and stop scams? Yeah,
it might highlight the shortcomings maybe of where social media doesn't fit the bill, or where scams go through. I mean, Callum's right. I mean, there are thousands of reviews, I guess, on, if you go on things like Trustpilot, where people say their accounts have been suspended, they've only had support from, like bots, no route to a human, etc., etc. So then extending that out to a payments product in X Money is obviously maybe going to raise those issues, and those hacked accounts. Does that extend to the money side? We'll have to wait and see, I guess, at the minute.
It is interesting because when you also partner the payments up all within the same app with the ads, and then also the fraudulent ads, and then also the bots and stuff like that, it can all combine into one. You may click on links and accounts even that could just immediately send you to a dodgy site or a dodgy link, and then it gets into your X Money account. Like we're still in the early phases of this, but it's a good point to mention that. It could be happening.
Well, I think actually it's I've got a note here I've just found on X's FAQs, which says that users must report unauthorized transactions quickly or risk losing the funds. I think the line is, your liability for unauthorized electronic fund transfers may depend on how quickly you report, which kind of goes back to the other issue of, well, if you can't get through to someone and there's only bot support, how
so basically if you don't do it so basically if you don't do it quick enough, you've lost your money. Like that sounds sensible, doesn't it?
Yeah. So, well, I don't know. Well, so Kieran, you're still in favour, but now have we maybe kind of swayed you the other way a little bit?
I mean, don't get me wrong. I can definitely see the holes in Musk's X Money plan. There's obviously some big question marks around it, and like you said, we'll only sort of see how they'll be answered in the coming months, and if stuff goes completely wrong, which you two seem to be hinting at, we'll see. But I know the thing is, I can just see I just try and take a more positive outlook on life, I guess, compared to you two, and I can sort of just see the benefits of X, and even if it's not X money which takes off, and it's not necessarily Elon Musk that we want to make richer. There might be someone else who does it, or someone else who gets an idea from it, and sort of innovates in this line of work, and improves payments.
Yeah, we should change this to the philosophy podcast, maybe. Kieran, our host. One thing we haven't mentioned about this is that there are kind of coverage gaps too. So X at the minute doesn't have a money transmitter license in New York or Massachusetts, I believe. So if your X card were added to, say, Apple Pay or Google Pay, it can't at the minute be used everywhere nationwide. And obviously New York is one of the biggest cities, vibrant hubs in America. Do you think with that in mind, it's a real barrier to kind of adoption of X money? And maybe are the kind of the features that have been promoted, the 6% APY, 3% cashback, etc., do they maybe mask certain flaws like a coverage gap if you go from maybe a certain state and come into New York, and then all of a sudden you can't use your X money account?
Well, I don't know. I mean, I don't know about New York. I mean, I've only been a handful of times. But Kieran, you actually know a bit more about Massachusetts, don't you?
Yeah, I do. Yeah, I guess one of the big things for this is obviously the coverage gap. Yeah, you can't use it in a certain state. That's massive. Unless maybe you use a VPN. I don't know if people will do that or not. I guess that's always a workaround. I'm not promoting that, but that is maybe a workaround. That there is obviously a big coverage gap. However, at the minute, there is maybe a positive side to X money not being live in New York. I mean, we've seen New York recently take such a hard line on the likes of these P2P transfer payments companies around fraud, and they've pretty much been suing everyone, it seems, at the minute. So while it's in these early stages, maybe it's a good job that they're not live in New York. However, yeah, Lewis, I can see there's a huge coverage gap. And like you said, you've got Boston in Massachusetts, New York in New York. These are two massive cities that really, if you were going to be launching any kind of payments company, you would want licenses there sooner rather than later.
Yeah, sure. Let's touch on, Kieran, a bit about what you spoke about last week, because I know you did speak about the in your paper check column around it, and to do with, I suppose, if you're banned from X, so are you banned from your X money account? And you found that the policy only bites for certain child safety and violent and hateful entities policies within X. Why do you think that policy works particularly well?
I guess my line from why the policy worked particularly well is mostly due to it sort of giving people real consequences for sort of how they act. I mean, if you have your payments and your social media all under one roof, I think social media at the minute has become such a wild west, and people can say anything and do anything. And I understand that this policy is only for the worst of the worst. It is only for, like you said, the child safety and the violent/hateful entities sort of areas. But maybe I'm being really hard here, but I do think there's some sort of benefit to sort of being able to take someone's privilege of sort of payments and banking away if they are the worst people. And then also the fact that they send a paper check to the person's address, I thought was just quite hilarious, to be honest. I mean, some of these people who would be getting them would be people who are sort of trolls online and spend most of the days online in the mum's basement, I think I wrote in the in my column, and sort of having them receive a paper check, then having to go to a bank in person, queue up for about 3 to 4 minutes, just to check it in, to get the remaining balance back in another bank account. I think it would be amazing and quite funny. So yeah.
obviously the people that do sort of fall foul are probably certain people who have breached a certain limit, and I suppose as in the amount that do fall foul of those regulations that are users of X money. I suppose it's a small number, but it's an interesting point to make around the governance of it. Lastly, guys, I just want to touch on a bit about, I guess, the trend of these new payment services coming out, new financial services. Obviously, we mentioned the benefits that have been touted with X money, with the 6% APY, and it's all perhaps designed to lure people in for that product. We've seen something like that recently. I know we covered Tio, which was that kind of buy now, pay maybe product. Obviously, that was sort of on rail based on stable coins, but it's the same kind of principle of, I suppose, enticing people for a different kind of product and sort of giving them sort of really, really good value for the product that they go and bank with or work with. Do you think that's a growing trend, and do you think maybe there needs to be more maybe public discourse around what that means for people? I mean, do people need to be more cautious before sort of seeing the bright lights of a new product that seems fantastic, but obviously there may be drawbacks, and those perks might not last forever?
I think it's just like everything almost, it just comes to trust. And Visa, MasterCard are the two biggest card networks in the world because they're also the longest and the most trusted, right? I think payments is all about trust for the consumer, and it's also about stability for our businesses. And I just think non-traditional finance firms, they've obviously gotten into payments through embedded finance and banking as a service, etc., etc. But I think it does come to a limit. I think one thing that kind of is similar to this, Lewis, is towards the end of last year, every company would just felt like launching a stablecoin, and I was like, I think this is getting a bit out of hand at this point. I think Klarna's had their own stablecoin so far. I think when you've got a market as such in its infancy, like the stablecoin market, you don't then start to need to just hop on the train and just start launching your own stablecoin without no real explanation well, what's this for? How can we develop this? What's unique and separate to the other stablecoins like USDC and USDT? So yeah, I think a load of companies are going to keep continue to doing this. It's just a matter of fact. If you want to try it, and if it works for you, it works for you. But yeah, I guess.
Yeah, cool. Okay, guys. In a word, X money, a success or not?
I'm going to say it's going to be a success. Not in the way that people might think, as in it's going to take over and be the way that people send each other money, but in its own little ecosystem, I think it's going to be a success. And I think you're going to see the likes of Facebook and other social media platforms try and replicate it in the coming years.
That was the longest word I've ever heard, Kieran. But thank you anyway.
It was hyphenated.
Callum.
No. I'll just play devil's advocate and say no, but I actually think it has got legs, to be fair. We'll just have to see how it goes, but I'll just say no because Kieran said yeah.
We'll have to see. Well, hopefully we'll spark some debate around it, and I'm sure many of our viewers and listeners will have their own take on it. Unfortunately, that is all we have time for today, but thank you very much, Callum and Kieran, for coming back on this week. If you've been watching and you're not already subscribed to the Payment Expert podcast, make sure to subscribe wherever you do get your podcasts, with plenty more insight and analysis coming over the weeks and months ahead. And for the latest news as it happens, head over to paymentexpert.com. We'll see you all next time.